Hey guys, what's up? Chris Blum here with ChristopherBlum.com, and today I wanted to talk about the 1031 exchange, which is section 1031 of the Internal Revenue Code, and is perhaps one of the most important tools to real estate investors looking to create wealth, and a main reason that investors choose real estate as an asset class. So the 1031 exchange, in a nutshell, allows investors to defer paying capital gains. So what is a capital gain? A capital gain is just any profit that is made when selling an asset. This could be a car, stock, or a building. So when an investor sells real estate, he can choose to put the gains from the sale into another property and therefore defer paying the capital gains. So as an example, let's say that an investor sold a building that he purchased for $1 million for $2 million. So there was a $1 million capital gain. If the investor chose not to use a 1031 exchange, they would have to pay federal capital gains, which are taxed in 3 tranches depending on income, 0, 15, and 20%. But for this example, we'll say that they are already in the highest income bracket, so they're taxed at 20%, or $200,000. They would also have to pay any state capital gains tax. For example, in California, there is no capital gains tax, but the state taxes any capital gains as normal income, so you would pay somewhere between 1 and 13.3%. So again, we'll go for the highest, and we'll say it's around $150,000. It'd be a little less, but for the example, we'll say it's around $150,000. And then they would also have to pay a depreciation recapture tax. So throughout the life of a property, the property is being depreciated. This can be used as a tax write-off, but when you sell for a gain, it means that the building did not really depreciate, so you have to pay a recapture on that amount, and that is taxed at 25%. So that would be around another $50,000. So from this sale, the $1 million in profit is now only about $600,000. In other words, you had to pay $400,000 in capital gains and depreciation taxes. Well, in the 1031 exchange, you do not have to pay these. You defer them. You'll have to pay them down the line, but you can use that full $1 million into purchasing a new property. So what would that look like in terms of your buying power? So if you took that $600,000 as a down payment, 20%, you'd be able to purchase about $3 million in real estate. But if you use the full $1 million in profit, you can now purchase around $5 million in real estate if that $1 million was used as a 20% down payment. So that's a difference of $2 million in buying power. So what are the rules for a 1031 exchange? Well, first off, the most important is that it has to be used for a like-kind exchange. In other words, it has to be real estate for real estate, and it has to be the same class of real estate. So if it was an investment property, it needs to be another investment property. Now there can be diversification among the specific type, so you could sell vacant land and buy an office building, or sell a multifamily apartment and buy a retail store, but it does need to be real estate and it needs to be an investment property. You also have a timeline, and it's a pretty tight timeline. So from the time that you sell your property, you have 45 days to identify the property that you're going to exchange into, and you have 180 days to complete the entire exchange. So this is one of the negatives of the 1031 exchange, is that it can put you in the mindset where you need to find a property so fast that you end up overpaying. And finally, there are a bunch of different ways that you can exchange, and you can actually exchange into multiple properties. But in general, to reap the full benefits of the 1031 exchange, you need to exchange into a property that is equal or greater in value to the property you sold. So I hope this quick video on the 1031 exchange was useful and helps you understand why it is such an important wealth building tool. As always, if you enjoy the video, please consider subscribing and hitting the like button, and leave any comments you have down below.